Here's your market recap for March 30th to April 2nd, 2026. The big story: geopolitics and oil drove everything, with tensions around Iran sending oil over $110 a barrel. Let's start with stocks. The week started cautiously, but saw a relief rally midweek on unconfirmed reports Iran might be open to ending the war. The S&P 500 rose 2.9% as dip buyers stepped in. Then Thursday, April 2nd, whiplash. Oil spiked hard. West Texas Intermediate settled up 11.4% to over $111 a barrel, its highest since June 2022. At the lows, the Dow was off more than 600 points, but then headlines hit that Iran and Oman were working on a protocol to monitor ships through the Strait of Hormuz, and stocks ripped back. The Dow closed down just 61 points, while the S&P and Nasdaq squeaked out gains, a giant intraday reversal on purely geopolitical flow. Despite all that, the major averages were green for the week, with the Nasdaq leading at roughly 4.4%. The market was choppy but resilient. Now crypto. March 30th opened with a modest relief bounce. Bitcoin hovered around $67,500, with Ethereum near $2,057. As de-escalation chatter grew, Bitcoin pushed back above 68,000, tagging around 69,170 before cooling. By April 1st, BTC was roughly 68,500, and ETH was around 2,131. The behavior was classic: a rally on relief, then a pullback as investors debated if the turn was durable. Zooming out on March's scoreboard, war headlines and oil spikes ran the show. Bitcoin slipped roughly 2.7% for the month, while Ethereum eked out a 2.1% gain. Bottom line, crypto held up better than many expected, hinting at a mild safe haven vibe during peak stress. So, what are the key drivers to watch next? 1. Oil. Above $100 reignites inflation risk. The $110 print was your wake-up call. 2. The Fed. Higher for longer is still in play while inflation and oil stay sticky. 3. Geopolitics. The Strait of Hormuz is a global choke point. Any escalation can swing risk assets in minutes. What I do in this environment: stay defensive on the stock side and avoid chasing face-melting rallies. Dollar cost average into quality names and, if it fits your plan, into BTC within the $65,000 to $70,000 range. Stocks were volatile but resilient. Crypto held stronger than expected. Macro is still the boss. This is a headline-driven market, not a fundamentals-driven one for now. Stay focused, flexible, and disciplined.